Good morning, everyone, and welcome back to Morning Markets. A couple of things to share with you that we have been discussing this morning as an investment team. The first of which was just looking at how asset markets performed yesterday, and we touched on the positive sentiment that was in markets yesterday, and we saw the strength in Asian markets coming through, and that definitely fed through into European, UK markets, where we saw the Euro stocks up 3.4% yesterday, the FTSE 100 up 2.9%. That continued to build through the course of the day, and we saw strong performance also in US equity markets, with the Dow up just about 2%, the Nasdaq 1.7%, and the S&P close to 2% as well. Within that, we also saw those economically sensitive sectors outperforming the broader market. So that theme that we have been touching on for the past couple of weeks now, albeit it was interrupted last week, we're starting to see that reassert itself again over the past couple of days. So that's something to continue to focus on. I think if we take a step back and we look at just the four factors that we've been thinking about that are important to markets and to market sentiment at this point in time, it's one way to explain why we have this positive feeling in markets at this point in time, positive sentiment, I should say. And if we think about it from the perspective of monetary support, we heard from both the Federal Reserve and the Bank of Japan at the beginning of the week that they were increasing the support measures that they have in place for their respective economies. We also had Jerome Powell, the Fed chairperson, speaking last night at the Senate Banking Committee, and he again reiterated the support that would be readily available from the Fed, discussing that very much in the context of the challenges that it's presenting from an unemployment perspective, and the longer the lockdown progresses, the fact that we may move to more permanent issues for employment, and really stressing that the Fed is there to support employment, to support small and medium-sized enterprises and those businesses that are crucial to the US economy and crucial to employment prospects. So really providing that they're really committed to providing the support that the economy needs. I think also there was some speculation yesterday that the ECB would potentially be looking to do some more around the corporate bond programme in a similar vein to that which we've seen from the Fed. So that's something to watch. And then additional to that, we have the Bank of England meeting, and we'll get details of their thoughts tomorrow. The expectation there being that we'll see a further expansion of the quantitative easing programme as well. So we can observe that tomorrow, and we'll see what comes from that. Also, we've seen on the fiscal side increasing discussions in the US of an infrastructure package of some $1 trillion. And it's funny that we're talking in such large numbers, and they're all seeming to rattle off the tongue at this point in time. But again, that's 5% of GDP for infrastructure spending that could come in the next number of weeks. So we'll continue to look to see how that discussion progresses in the US. But clearly that will be something that will have a political angle to it. It's a presidential election year, and there will be challenges between the Democrats and the Republicans in terms of moving that forward. The other factors that we've seen that are important to think about is just the reopening of economies, and we continue to see that here in the UK. And we got an indication of that yesterday in the US with the very significant and material improvement in retail sales month on month, growing at some nearly 18%. Now again, that's a large number, a large change, but that speaks to the magnitude of the fall off that we saw in the previous month. And if we look at these things on a year-on-year basis, we still observe that retail sales were declining 6 to 7% year-on-year, but improvement nonetheless on a month-on-month basis. So positive trend as economies reopen. And again, it was a very much broad-based across a wide range of categories that we saw that improvement in US retail sales yesterday. Then I suppose the slight negative that we maybe want to just discuss is around the reopening side of things, and the increase in case count that we've seen overnight in Beijing in particular, and the action that the government is taking there, a number of school closures, also some business closures, and it looks as if today we've seen quite a number of flights from Beijing cancelled as well. So Chinese government moving to very swiftly contain the challenge that they're seeing in Beijing at this point in time. And that just marries together with some of the data that we were seeing in the US as states reopen, seeing an increase in the virus count. So that did knock sentiment a little bit later in the day in the US in particular. And that's fed through into how markets have performed in Asia overnight. We've seen equity markets there, little change, small negatives, small positives across the board. And we're seeing futures for the US, UK, Europe at this point in time, not really suggesting any change as those markets open up this morning. The other aspect that I think was supportive yesterday was just around some of the information that we're seeing and the success from a University of Oxford study on a treatment for those that were suffering from COVID-19. So that again speaks to the pull and the push within markets and within sentiment at this point in time. That's it from me today. Please join me again tomorrow. Thank you.